Bismillahirrahmanirrahim. Now we are going to do question June 2019 final exam question 3 on MFRS2 share-based payment. So based on your understanding now that share-based payment is when the company or the entity acquire goods or services and the consideration is paid either cash or equity, issuance of equity. And even if the company is paying by cash, that amount of cash is equivalent to the value of the equity of the entity. Okay, now let's read the question. The requirement with reference to the relevant financial reporting standard, explain on the accounting treatment on the acquisition of the machine. So we know that this question is about acquiring a machine. Show journal entries for the recognition and settlement. So there are two things that you have to do for recognition and settlement of the acquisition of the machine, and narration is also required. C. Advice on the recognition and measurement of equity settled share base. Okay, remember when the company pay for the goods or services received is either you pay by cash, which is equivalent to the equity value, or by the issuance of equity. So this question asks specifically on the equity settled. Okay, let's read the question. Mira prepare financial statement on 31st December each year. In January 2018, Mira Berhad signed a sale and purchase agreement to acquire a machine. The machine was shipped to the company on 1st February 18 but was received by the company on 1st March 18. So remember under MFRS2, when you want to recognize the goods or the services received, it must be when the date when it is received. So in this case, it was received on 1st March 18. Okay, so basically, date received the goods will be 1st March 18. Okay, the term of the agreement allow the company to pay for the machine either in term of cash. Okay, option to pay either number 1 is by cash, which is equivalent to the market value of 187,000 shares. Okay, or the second option is to issue 200,000 ordinary share at market value. The settlement must be done. Settlement must be done on 1st April 18, which is a month after you receive a month after the entity or the company received the goods. In this case, the machine. So it delay by 1 month. Yeah. Alright. So the market value of the company on share for the first 4 months as follows. Okay. Now remember when you want to measure the goods or services. Okay. Firstly, alright, in this case you acquire a machine. By right, you should take the fair value of the machine, the fair value of the goods. However, it's not given in the question. Therefore, if the fair value of the goods or services is not available, then we will take the fair value of the equity instrument. So, which fair value should you take? It would definitely, because you recognize on the date of receipt 1st March, therefore you will take RM2.75. Okay? Alright. In the previous years, when Mira acquired PPE under similar terms and conditions as the above, it settled the acquisition by cash. So since in this question, it says that the option to pay is rests to the company, to the entity. The company can choose either to pay by cash or by issue of share, but the experience shows that the company pay by cash. Therefore, we will take that as paying by cash and we will not use the second option. Alright, so now to answer, okay, let's say answer B first because the question asks for journal entry. Yeah? Okay, the question B, The question asks for journal entries. First, on the recognition. The recognition definitely on the date you receive the machine, that is on 1st March 18. So when you recognize the machine, it will be debit the machine, the PPE. And you credit apa? So it's either equity or liability. Okay, if you pay if the company issue shares, you will credit equity. If the company pay by cash, the company will credit liability. So in this case, we will choose option 1, which is cash. Therefore, you will credit liability. Why do you credit liability? You have not paid yet. Alright, you pay on the settlement is on 1st April. So when you receive the machine, you have not paid for the machine. That's why you credit liability, and the measurement would be the fair value of the machine is not available, so we take the fair value of the equity on the receive date, which is RM2.75. So RM RM2.75 times with the number of shares, 187,000 here. So 187 units shares, ya. Saya tulis shares lah. Got confused. Okay, 170,000 shares. So you will get 514,250. Okay, and the question asks for narration. Narration is required, so it would be to record the purchase of the machine. Okay, next is on the settlement. Recognition done. Now on the settlement, which is on 1st April 18. This is when you pay. Okay, now when you pay, that means you will reduce your liability. So you will debit liability by that much, 514,250. Okay, and then you pay by cash, definitely you will credit cash. Okay, now remember the standard says that when you pay for the liability, alright, and at a different date, okay, because you create the liability on 1st March, but you pay on 1st April, the standard says that you need to remeasure, alright, remeasure the liability. So if we look at 1st April 18 here, okay, the fair value has changed to 2.8. That means there is an increase of 0.05. This is the changes in fair value because you settle later than the date you receive the goods. So you have to recognize the 0.05 in the SOPL. So you will debit SOPL. This is the fair value changes. So that will be 0.05 times with 187,000. Okay, so you should get 9350. So your credit cash would be 514. Maknanya you are paying 2.8 lah on this date 1st April. You are paying 2.8. So 2.8 times 187, or you just add this together, you will get 523,600. Okay, so the information about recognizing the fair value changes here, you can find in page 731 of the Tan Yon Tong, yeah, version 6. Okay, page 731, up there on the right side, cash settle share-based payment transaction. If you read there, for cash settle share-based payment, cash settle share-based meaning that you are paying by cash lah, sama macam soalan ni. Okay, the standard require that the entity shall measure the goods acquired and the liability incurred at the fair value of the liability. So in this case, at the fair value of the liability on 1st March is 2.75. Until the liability is settled, the entity shall remeasure the fair value of the liability at the end of each reporting period and at the date of settlement with any changes in fair value recognized in profit or loss for the period. So the any changes we have to recognize. That's why we recognize the increase by 0.05 here into the SOPL. This is considered as another expenses lah. Alright, meaning that you have to pay more when you settle the payment. Okay, so that's done for part B. Okay, done. So narration is required. So what is the narration for this one? This one is to record the settlement, the settlement by cash and changes in fair value. Changes in the fair value. Okay. Alright, that is done for that part B. Okay, now we go to part A. Alright, part A, with reference to the relevant financial reporting standard, explain on the accounting treatment of the acquisition of the machine. Okay, so this one okay, so how do you answer every time when you need to answer for the accounting treatment? Okay, letak dekat sini lah. Accounting treatment. Okay, the question asks the accounting treatment. Accounting treatment on the acquisition of the machine. So the first sentence, make it in a sentence form. The first sentence is this transaction is to be treated as share-based payment under MFRS2. Okay, alright. Next, so based on the question, the entity is given choice to pay either cash settle or equity settle. Okay, meaning that either you want to pay by cash or by okay. So the standard says that this one you can refer to page 732 under the heading share-based payment with cash alternative. Okay, so you move on to page 734. It says that if the right to choose settlement rests with the entity shall determine whether it has a present obligation. Okay, so we will answer that here. Okay, kita dah jawab kat situ. The entity is given choice to pay either cash settle or equity settle. Okay. So the entity shall determine whether it has a present obligation, to settle in cash, alright, shall determine whether it has a present obligation to settle in cash. Saya pendekkan saja. Okay. What does it make? What does it says when the company has a present obligation? Okay. There is a present obligation, okay, to settle in cash if okay, number 1, if the choice of settlement in equity has no commercial value, no commercial substance. Okay, the choice of equity settle has no commercial substance. Okay, or the entity has a past practice. The entity has a past practice to pay in cash or stated in their policy. Okay, state in the policy of settling in cash. Or, okay, this is or okay, or, ada lagi or ke? Or, whenever the counterparty, or whenever the counterparty requests, okay, ask for cash settlement. So this is condition where you need to pay in cash. Alright, so based on this question, there is a present million. Okay, so based on this question, the past experience, okay, follow the question lah. Based in a previous year, with similar transaction, the entity paid in cash. Therefore, the purchase of the machine is cash settled. Okay, so that's answer for part A. Okay, make sure that you mention all these points. Alright, B settle. Okay, C, advise Mira on the recognition and the measurement of equity settle based payment. Okay, so this one, the question asks, how do you recognize the machine, the asset or the goods if it is an equity base? So ada dua kat sini dia tanya, the recognition here and the measurement. So when you recognize under the equity base, equity settle equity settle. Okay, so the recognition, so how do you answer this? Under the share-based payment, the goods or services, are recognized when they are received. Okay, so under equity settle, okay, under equity settle, the goods are recognized when they are received The goods are recognized when on the date, recognized on the date they are received. On the date they are received. Okay, with corresponding increase in equity. So this is very important because the one that differentiate between cash settle and equity settle is what do you credit. For equity settle, you will credit equity, and for cash settle, you will credit liability. Okay, this one is cash settle, so you credit liability. If it is equity settle, so you will credit the equity. Okay, that is a recognition. Okay, the first time when you acquire the asset. Next, the question asks for the measurement. Okay, for measurement, how do you measure? The goods or services are measured directly, okay, at the fair value of the goods or services received. Okay, the goods are measured directly at the fair value of the goods received at the date the goods or services are received. Okay, so you have to mention. So when you want to firstly recognize the initial recognition, of course you will look at what is the date you receive the goods. Okay, and you will increase the asset or the expenses, and you will increase the equity. And what is the value? It will be the value of the goods or services. Okay, the value of the goods or services received. Alright, so that basically answer for June 2019. Okay, thank you.